It's time to set fire to fire with some realistic financial planning. Welcome to the Dean's List. I'm Dean Lyulkin. As you might know, I cut my teeth in the investment business at Ken Fisher's giant RIA, and then I built Cardiff into America's favorite small business lender over the past 17 years. This show is here to help you build wealth and achieve financial freedom. So today we're going to deep dive into something I like to call 550. Financial independence by the age of 50. Because in my opinion, there's this FIRE movement out there, and it's a load of crap. FIRE stands for Financial Independence, Retire Early. And we'll get into all the reasons why I think this is complete nonsense in the way that it's packaged and sold. And together, we're going to explore some realistic income paths for 30, 40, and 50-year-olds to retire early, along with disciplined financial plans that acknowledge something FIRE ignores: how expensive it is to raise a family in America's top suburbs for doctors, lawyers, dentists, corporate executives, and successful small business owners just like you. We're going to break the video up into 3 parts. Number 1, why does traditional FIRE miss the mark for families? There are so many hidden costs it doesn't cover. Number 2, we'll get into detailed math behind income and savings for 550. And we'll talk about really realistic projections that are applicable to your situation, your life. And number 3, we're going to get a reality check. What does it take to build the FI 50 plan? We'll get into some big numbers, rate of return requirements, and the discipline you need to stick to it. So we'll get right to why traditional FIRE misses the mark for families. The typical FIRE approach emphasizes aggressive savings. They're talking about saving 40 to 60% of your income each month, and then living minimalistically. Now, I wouldn't subject my children to this nonsense, but you do you. For me, FIRE misses many significant financial burdens for families in upper middle class areas of our country. So here's some biggies. Private school tuition. You're talking about $40,000 per year per child. Very similar to what college costs. And that's where we've gotten to today in 2024, meaning that a family with 2 kids could face $80,000 a year just for education expenses. And don't worry, not everyone sends their kids to private school. So if you do send your kids to some of the best public schools in the country, know that the pricey tutors, the donations, the expensive family and group trips, all of that costs real money too. We'll also talk about social expectations. In upper middle class suburbs, keeping up with your peers is financially taxing. Ski trips, European vacations, lavish coming of age celebrations, all of these things cost tens of thousands and up. And that all adds to the financial strain on families. Now we'll get into college expenses. Imagine a 4-year private college education today can average $300,000 per child. That's $600,000 for 2 kids, and not even getting into weddings and down payments on homes yet. But if we're talking about a college town or a major city where you might help your child make that investment into their first property, you're going to be shelling out $100,000, $200,000 per kid. So $200,000 to $400,000 has to be set aside just to help them with these down payments. Now we're going to get into some detailed math behind the income and savings that's required for 550 to achieve that financial independence by the age of 50, which I think is a much more realistic goal than thinking about it in your 20s and 30s for a professional. We analyze some realistic income paths with disciplined savings of about 25% of your after-tax income. I'm thinking of age 30 to 35. We're talking about someone making about $250,000 a year pre-tax, about $175,000 after tax, which gets you to save about $43,000, almost $44,000 a year. And don't forget small business owners, right? We've got lots of people who own franchises, construction companies, all sorts of professional services businesses making, $250,000 to $1 million a year. So what are we going to do with all of the savings from the age of 30 to 50? We're going to grow that money. Right? So at a 10% return, which is pretty conservative, right? The market's done better than that over the last 10 years. Total future value comes out to about $3.7 million by age 50. And if we just crank that return up a little bit to 12%, we're going to get right into the $4.65 million range. And so it's a pretty big number. You can see just a 2-point difference in returns means over 20 years, you're achieving over $1 million more in retirement savings. So it's time for a reality check. What does it take to build a 550 plan? Forgetting about the idea of FIRE in your 20s and 30s, but just retiring early at 50 and maintaining a nice upper middle class lifestyle and taking care of a family with 2.5 kids. Well, the number, you think it's shocking. I think it's kind of shocking. $5 million to comfortably maintain an upper middle class lifestyle while supporting our family's futures. $5 million is the target by 50. Why is that? Annual living expenses. We plan for roughly $150,000 in annual living expenses over 35 years. So from age 50 to age 85. A minimum of $4 million is required, right? Because if you take a reasonable 4% annual withdrawals from those funds, right, you're gonna need $4 million to survive, because that 4% will help you to not tap too much into your assets, be able to pass them on to your children and keep up with inflation. You've got education and milestones, right? We talked about college for 2 children, $600,000. Weddings and other events, $100,000 to $200,000. A down payment for your children's homes, $200,000 to $400,000. And this is a biggie for me. One of the biggest goals I have for my 50s and 60s is family experiences, right? I want to budget $40,000 annually for family vacations. And when I say family, I mean at some point, it's going to include not just your children, but their significant others and your grandkids. And to be able to take at least one vacation a year, whether it's to Hawaii or to Miami and Florida, different trips for different budgets. That is such a unique and rewarding thing that I want to be able to do for my family. And I think most of you who are in this situation and thinking about, how do I achieve early retirement by 50, 55, maybe it's 60. I think this is something very important for all of us to consider. We talked about this idea of needing $5 million for retirement. There's a case to be made that the real number is not 5 million. The real number for 550 is $10 million. I know. How are you going to get to $10 million? Well, you either need to work at a publicly traded company where your restricted stock units and your stock grants have appreciated tremendously, because it's not going to happen with your salaries. You need to be a highly paid professional, meaning at the top of your game as a lawyer or physician, meaning you're making over 7 figures. What else? Oh yeah, the small business owners out there. Right? If you're running a $20 to $50 million revenue business with even 10% net profit margins, you're going to be able to get there. These are small parts of our population, so I'm not necessarily talking only to them, but keep in mind that $10 million is the real target for you to comfortably retire at 50 in 2024, right? Or even 2025 to 2030. Sustaining a 25% savings rate is probably one of the greatest hurdles that all of us will face from the age of 30 to 50 in order to meet this $5 or $10 million goal, right? Unless we enjoy this amazing windfall of selling a business or having some sort of equity related event, right? Most people will not. And so this requires tremendous discipline, and maintaining a 25% savings rate, it requires intentional living and budgeting. For example, at age 35, an after-tax income of $245,000 with 25% savings means setting aside $61,000 that year. Yes, you could do that in your 401k and some other tax-deferred vehicles. You're not going to be able to do that in an IRA if you're already contributing to 401k just due to income limits. But $61,000, $5,000 a month doesn't sound that crazy. But in today's world of keeping up with the Joneses and the Kardashians, it is extremely difficult. And I know because I live this every single day. Achieving 550, right? Financial independence at 50 with a $5 million target is possible for professionals and business owners, but it requires disciplined savings and strategic investments and an understanding of family commitments. To truly secure a luxurious retirement with room for all the planned and unforeseen expenses, aiming for 10 million may be the ideal. This goal allows for both security and the joy of sharing meaningful experiences with our kids and grandkids. That's what I want, without needing to scale back or worry about costs. So thank you so much for tuning in. I want you to stay subscribed for more strategies on building wealth and making practical financial decisions. And please like and share. Most importantly, I want you to spend your life doing what you love, not what you have to do.